What if I told you that everybody's got everything about AI stocks wrong? That's what Tallulah just told me, and she is my chief financial analyst here. She said to me, Felix, in 2025, you need to be aware of this shift in actual workplace automation. The biggest change to how we live since the Industrial Revolution, and it's AI agents that are doing it. They're not just chatting with you anymore like a Google sort of search engine. They're actually running entire departments. That's what Tallulah said here, and she's very, very smart. And the numbers are extraordinary. NVIDIA's revenue jumped 152%, Microsoft 70% margins, and ServiceNow's got enterprise workflows all but locked down. But here is what actually fascinates me and Tallulah. The real winners in this AI agent economy are not who you think. And if you're short of time or just have TikTok brain, here is the essence in this video. 5 companies are quietly architecting a revolution while others are still catching up. We're talking about real estate platform, we're talking about a cybersecurity leader, and 3 tech giants that people are still overlooking. And after spending years trading for myself and analyzing thousands of tech companies and all the big transitions we've seen since 2000, Tallulah said to me, Felix, this one is truly different. Maybe she knows something we don't. Well, she told it to me. Let me break it down for you. But speaking of breaking stuff down, I've got something for you that, if you were to accept it, would change your life forever, for the better. It would allow you to spot breakouts, so stocks going to the moon before they actually go to the moon, and it'll allow you to get out of them before they collapse. Is that something you might be interested in? Well, if it is, then you're in luck. I have remade my entire masterclass into a really, really short format. It's like 10 minutes or 15 minutes or something like that. So you go straight into the teaching. You get the 3 rules that every single successful investor out there has ever used, that I learned while working in a bank and have been using for the last 10 plus years, and allows us to do whatever the heck we want. So if you want to get your pause on that, go to felixfriends.org/get-free and watch it. And guess what? It's free, and it'll help you to get free like it helped me to get free. So whether you're a complete beginner or you've been investing for years, this masterclass gives you my proven step-by-step process to start spotting stock breakouts right now. And you can keep that knowledge forever. You can even teach your children. So check it out. Now let's analyze why these 5 companies are positioned to dominate the agent economy, while others are still figuring out what hit them. Maybe you've seen basic automations in your company or where you work, but what we're seeing now, it's like comparing a bicycle of automation to a Tesla. These new AI agents are not following the rules anymore. They're thinking, they're adapting, and they're handling complex tasks that used to need entire teams of golden retrievers, people. And they can do it in minutes with very, very few mistakes. They're not just faster, they're actually smarter. I know it sucks, but it's true. I've been outsmarted by a cat, by a golden retriever, and now by AI agents. But look, the numbers actually tell you everything you need to know. But here is what got me really excited. This is no longer just a tech story. This isn't about sort of smart search. Whether you're in real estate and healthcare and finance, these AI agents are becoming the invisible workforce. They're handling everything from customer service to complex legal documents. I used to be a lawyer. I don't think you need lawyers anymore. I just don't think 99% of the things that lawyers do are required anymore. You can probably slim down 1,000 lawyer law firm to maybe 50. And this very year, we're seeing something extraordinary. Companies that embrace the AI agents early are reporting margin improvements of 15 to 20%. That's extraordinary. So let's look at our first powerhouse here, Microsoft. What makes them special? Well, they have Bill and his shorts, but in all seriousness, they've got something that's practically impossible to replicate. Deep integration across the entire business ecosystem. Think about this. Microsoft isn't just bolting AI onto existing products. Well, maybe they are. but they have the OpenAI partnership. So they're getting access to the latest AI. And then they're weaving those AI agents into the fabric of how millions of people work every day. Their Copilot is not just a chatbot, it's your digital co-worker. And whether you want it or not, it's getting installed on your system. And it'll work with you in Teams, in Office, in GitHub, in Azure, and in all the tentacles that is, I was going to say, Bill Gates, but you know what I'm talking about. And they can basically force the adoption because they can just turn it on because every enterprise out there already uses Microsoft Office products pretty much. And guess what they've just done? They've just raised prices of Office 365. And you know why? Because of AI. They're saying it's so much better. People are going to pay 30% more for it. And I'm going to have to too because I'm a sucker. I have to use it, don't I? But let's take a step up or back. What's the scorecard of Microsoft? There's a B for cash flow and growth and momentum. That's pretty good. What about the standouts? An A for profit health. So they're not just growing, they are really, really freaking profitable. If we dig a little bit deeper, they have a 70% gross margin. That's like having a money printing machine. I mean, Jerome Powell is jealous of Microsoft and they have virtually no debt. They're insanely financially strong. So why do I like Microsoft as an investment? Don't get me started on the products, but they are already embedded into the daily workflows of pretty much every company out there. So all they're going to do is turn on the bots, the agents, which they're already doing. They call them co-pilots. And you suddenly have, without doing any sales, with zero customer acquisition cost, you have a higher margin. So how do we trade a thing like Microsoft? Well, let me pull up for you inside Trade Vision here, which is the software that we built to give you insane quality data, like the same quality data you'd have access to if you're working on Wall Street. And there's a free week's trial to it, so do check it out if you wish. But essentially what it's saying to you is right now, actually, we call the buy signal here at 446, and we've gone a little bit sideways since. But if you zoom out a little, what you actually see is this kind of longish term trajectory there. I'm just going to make that line, if I'm allowed. There we go, make that purple. And the red line down here is sort of the bottom end of that. So we're kind of in this channel. I'm just going to turn off the trends so you see it a bit more clearly. So we're in this channel. It's a very, very, very slow uptrend channel, but it's an uptrend nevertheless. Now, we were actually higher in July last year. We've kind of done nothing in about 7 months. If you zoom out a bit more, it almost looks like we've done virtually nothing since last March. It's almost a year of underperformance. And I like that because the golden rule that we have is what? It's the longer the sideways action, the bigger the eventual breakout. That's just the way the market works. So do we like it or do we like it? We like it. We like it a lot. Now, is this the perfect entry point? You know, honestly, with a stock like Microsoft, if you have a long-term horizon, I actually don't think you need a perfect entry point. It's probably one of those stocks you can't discount average into just because it's so diversified. Though if you wanted to look for one, you'd probably want to take out here the 450 high, maybe even the 460 resistance up there. And then you want to see a great big green candle like one of those, like a big bushy, shiny one. And haven't seen that quite yet, so maybe wait for earnings, which are on the 29th. But it's a very solid, respectable thing. Basically, it's showing you every single time that we dip, right, here and there and here and here and there and here. Every single time we dip, people buy the freaking dip because they understand just how good that is. So you have this support channel here, right, that no matter what happens, we don't really go below 400. Of course, there's always risk in everything, but it looks like a very, very strong setup here. So let's talk about the second company here, ServiceNow, and they're quietly becoming, well, the backbone of enterprise automation. I know that's about as sexy as watching paint dry, but they're not quite as flashy as Microsoft. But they're actually the ones making sure your IT tickets get resolved and new employees get onboarded like that. So what do they do? They basically sell workflows, digital workflows. And once you start using ServiceNow, removing it would be like removing all the plumbing from your house while still living in it. It's just really, really painful. So people stick around. And the AI agents are taking this now to the next level. They're handling more complex tasks across IT, HR, customer service, automatically and therefore at nearly zero cost. And if you look at their headmaster scorecard, well, you got B's for cash flow, growth, momentum, profit health, but There is an F for fail for relative value, and we'll get to that in just a moment because that's important. But the numbers tell us an impressive story. 23% growth at the top, and they have an 80% gross margin. So even Bill Gates, the generous and magnanimous, is jealous of this market. Why? Because they have this incredible pricing power. So what's the concern? Well, the PE ratio is 165. And you might go, oh my God, Ran, how could you ever buy a stock with 165 PE? It's basically, a high PE means the market is pricing in a lot of future growth. That's really all it is. They're just saying this thing is going to do really, really well down the road, and therefore it's going to get significantly cheaper. And how's that possible? Well, their moat is getting wider every day. Each new AI agent feature they add makes the platform more valuable and even harder to replace. Think about removing all the plumbing from your house, as I just said. They have very high retention rates, and they're expanding the use case again and again. So it's basically like plumbing that sort of digs extra pipes through your house without damaging anything. The longer you have it, the harder it is to get rid of it. So how do we trade a thing like Now, which is the ticker for ServiceNow? Ticker Now. Well, as you can see, it's been on a pretty sweet upward trend, right? If you just connect sort of the lows here in a kind of slightly haphazard fashion, that was sort of the uptrend, and we dipped below it slightly in early January. That was sort of the, let's all freak out, it's early January dip, you know, Trump's going to get in. Terrible things would happen when billionaires run the country. Like, why would the market be worried about that? And right now, what are we seeing? Well, we are almost taking out the, may I have a pen? The previous resistance here, which was at about 1160 or something like that. So what we're going to do, take out that resistance here, and then boom, you know, we go further up to the moon. That's the way I see it. Now, nothing goes up in a straight line and so on. And, you know, you can see you've had some dips from 150 all the way down to 1,000, and it zigzagged a fair bit. But the old adage is that the longer it goes sideways, the bigger the breakout. That still seems to be true here. So at the moment, we've had a lot of rally up. So again, there was a sideways action here, rally up. So it could be that we are due for one of these sideways wobbles for a bit. So it really depends on your time horizon. How long do you have to make money? So for me, it isn't a textbook classic entry point. It isn't a breakout by any means. But taking out that high here at sort of 1150 would certainly be bullish and bullisher. Now, I know you've heard about NVIDIA. Probably the most discussed AI stock out there. Today, as I'm recording this, everyone's saying it's all over for NVIDIA, and the Chinese are making, you know, whatever AIG on a flip phone, and then we don't need NVIDIA anymore. And okay, maybe some people believe that. I don't. Basically, we're going to see massive, massive demand for AI compute power. AIG, which is essentially intelligent AI, is going to take 10 times or 100 times the compute power we have, and it's going to have to get more energy efficient because we'll otherwise be using all the energy of the planet, and therefore people are going to upgrade these present NVIDIA GPUs several times. The cycle is still very, very much heating up. So every major AI model, ChatGPT to Claude, runs on NVIDIA's hardware. And I know some people are claiming they've invented one, and as I say, they're running it on a Commodore or something like that. But, you know, PR and reality are two different things. They are powering the AI revolution. It's like the guy who invented the steam engine. That's basically what NVIDIA is. And their school scorecard is something amazing. Straight Ace for cash flow, growth and profit health. A B in momentum, which just shows the stock hasn't gone up as much. And then the relative value is D. Okay, but that's actually extraordinary because remember ServiceNow, they had an F for relative value. So NVIDIA is actually relatively cheap right now compared to where they've been the last couple of years. And just to understand how good that company is, every dollar that comes into NVIDIA, 50 cents of that, half of that is straight cash. Just pure cash. They're not spending it, they're not investing it, they're not using it for R&D. It's just straight cash left over. And I'm not saying NVIDIA is going to go up in a straight line forever. The chip market is cyclical. But where we're sitting right now, when every tech company in the world tells you they're going to spend more in 2025 than they did in 2024, it's kind of hard to be bearish on this if you have a little bit longer of a time horizon than, you know, I don't know, a gnat they're also preparing themselves for the next stage in life, when people buy less GPUs and they become sort of more like the Apple stage of life, right? People are buying less iPhones. Have I got an iPhone lying around? Nope, only an Android. Apple makes more money now out of a similar amount of software. The software stuff's growing and the margins are great. NVIDIA's doing the same thing. They're locking you into their software. And you're going to have to pay license fees for that software, which means even when people are full of GPUs, the money that's going to tick in from millions and millions and millions of GPUs will be extraordinary. So they're thinking ahead, these guys, they're smart. So how do we trade a thing like NVIDIA? Well, look at the stock chart again. The stock chart tells you everything you need to know. And if you want to look at my stock chart, well, go to tradevision.io and grab yourself a week's trial to it. And you see the blue box I painted in here? It's basically telling you we're going nowhere. And we've been going nowhere since October 2024. We're just going sideways. But actually, if you go back a bit further, we're trading at the same levels we're trading in June. So we're really seeing bugger all action here on NVIDIA. And again, that's a good thing, because the longer we trade sideways, the stronger the breakout, right? And this thing really hasn't done anything in a very long time. So I quite like it. Now, earnings are, of course, coming up. They report quite late in sort of middle end of February. I think it's the 20th, 19th, it says down here. 18th even. Is it 18th? Yeah. 19th, it says. You click on that little button, it tells you. And we expect them to report 66% more profit than last year. Are they going to beat that? I think they will. Yes, I think they will. So again, is it the perfect entry point? No, and today as I'm putting this out, this is probably going to be a big red day for NVIDIA. But look, we haven't been dipping below this sort of 130 line here, right, for a while. Why is that? Well, if you tap on your support level, and that is a level that we compute, we calculate from all the market positions out there, all the options positions out there, which shows us where we can basically figure out where the hedging sits, where people have to buy. At 130, people have to buy. That's been pretty accurate over the last couple of months. So, you know, dip buyers, that could be an opportunity. Anybody else, wait and watch for a breakout above 150 with a lot of volume and then jump on the rocket there. It's, of course, just my opinion. You have to come to your own conclusions on this. Now, here's another stock, Palo Alto. Because in a world where AI agents are handling sensitive data, cybersecurity becomes incredibly critical, because there is a darker side. More automation means more vulnerabilities, right? And that's where Palo Alto comes in. They're not just protecting networks, they're using AI to police AI. It's a bit like having a security dog, like, you know, imagine Winston, you break in and you say, hello, Winston, and you rub his tummy and he goes, woof. He's not the greatest security guard in the world. I think he literally would just say, have you got snacks? And if you do, then you'll be just fine. And if you don't, he'll follow you around until you give him some snacks. But imagine he was a Doberman, right? Then you'd have Palo Alto. Is it a good business? Well, look at the headmaster scorecard. A for growth health, B in momentum and profit health, C for cash flow. Okay, they're spending a little bit too much. D for relative value, which is not too bad, as we've now learned. But what I really like about a business, if you know nothing about a business, look at just one number, look at gross margin. It tells you pricing power. And if a company has good pricing power, you know the business is good, you know the product is good, and you know that it's hard to replace them and there probably aren't that many competitors. A gross margin above 70% is kind of where you start, you know, breaking out into kumbaya. It's just wonderful. 74% is the gross margin of Palo Alto. So they have premium pricing power. They have more pricing power than, you know, Bill the Charitable. So is it expensive? It's a 42 times PE ratio, but PE ratios tell you very little. They tell you about what the price is now compared to last year's profits. What you really want to care about is the price now compared to next year's or the years after profit. That's kind of the way you want to be looking at it. So to me, the guard dog AI business is one that's going to absolutely explode, because once you have a business where you have 1,000, 10,000, 100,000, maybe even millions of AI agents, well, what if one of them goes rogue? What if 1,000 of them go rogue, right? Because someone's hacked them. That's a big fucking problem, especially if they're running, you know, I don't know, airports, airlines, critical infrastructure. So you think people are going to spend money on Palo Alto? I think so, yeah. So Now, are there other companies in this space? Of course there are. So you could, buy a basket of them if you will. I'm sure there's an ETF out there for it. But let's look at how we would trade or invest in Palo Alto. The ticker symbol is PANW. Palo Alto Networks, I guess. PANW. And what do you see? What do you see? Well, we had a pretty significant dip here, pretty significant sell-off. Did we bounce off the 150? Nope. Off the 200? Yeah. So that was a pretty scary sell-off down there, and that hasn't happened since, well, actually it happens fairly regularly. It happens in August when the Japanese screwed things up, and it happened again in April last year. So you have these opportunities, actually, by this being a very volatile stock, to find dips. So that would be one approach, is you wait for it to break down below the yellow line there, which is the 50-day moving average, and somewhere buy down here, which would be better than buying at the top. Right now, we're still below the 50-day moving average line. It's still sloping down. I'm not somebody who likes to buy falling things typically, so I prefer to buy above it and wait for the breakout. And I think we might need to wait a little bit more given market sentiment today, but it'll happen. It'll come. Earnings are when? Earnings are on the 18th of February. So really, in my ideal book, what we would see is breakout above the 50 moving average, take out the $200 resistance line here. These lines are insanely important, which basically corresponds with the highs from December. And then we'd get a really nice, big, beautiful green volume candle down there. And that's the moment where we go, boom. Right? So that's the one when I'd be looking at this. And here's our final pick, Zillow. And that's probably the most unexpected choice in the AI agent conversation, but there's something really fascinating happening in real estate. Think about buying a house. It's usually a mess of paperwork, phone calls, waiting, having to talk to real estate agents, but Zillow is transforming this entire experience with AI agents. They're not just showing you houses anymore, they're creating digital assistants that understand your preferences better than most real estate agents, actually than all real estate agents. That might seem like a difficult thing to do, but if you've met some real estate agents, there must be some nice ones. I just haven't met them yet. Actually, no, I did meet one last week. He was actually very nice. But yeah, a lot of them are, never mind. Let's move on. Otherwise, I'll never be able to buy anything ever again. So what's the business like? Well, Headmaster tells me they have a B for cash flow and momentum, a C and D's elsewhere. So kind of needs some improvement, doesn't it? But let's talk about their strength. Remember I said to you, pricing power is key, and that gross margin is the number one thing to look at for pricing power. Well, there's a 76%. Again, better than Bill the Wonderful's Microsoft margins. And it shows that they've built a very powerful digital platform that can actually, well, scale apparently. Now, revenue is growing 13%. That's not amazing, but we're talking about real estate here. It's not like people are going to sell 100 times more homes this month than they did last year, right? It doesn't quite work like that. Now, the problem is, and that's the only problem, they're running at a loss. But here is why I'm going to keep watching Zillow. They're sitting on a gold mine of real estate data, and the AI agents are getting smarter. And as real estate markets stabilized, because 2024 wasn't great for real estate, the AI-driven solutions could revolutionize how properties are bought and sold. Think about this. They're not just a real estate website anymore. They're building this AI ecosystem that could automate and streamline the entire home buying process. So how do we trade a thing like Z for Z, Zillow? Okay, well, let me introduce something to you, which is, don't hodl. And what have we got here? We've got this beautiful rally up in 2020, right? Our breakout indicator here called 3 breakouts on the way up, which is of course lovely. And then, well, it completely collapsed. And the problem, of course, is that a lot of people buy the top and then they hold on to it. They discount average down. They keep buying and buying and buying. And then somewhere here, they give up and they've just destroyed 80% of their capital. Please don't do that. It's avoidable. It's really avoidable. So if you'd followed our trend indicator, you would have made 62% over the period, say, compared to 26% over the last 2 years. And if you'd watched my masterclass, well, you would know that you would have sold approximately there. You would have sold there. And that's actually very, very easy to understand once you watch it, once you learn it. Now, interestingly, we called a breakout here in the early November. It is actually a classic textbook breakout, and that was pretty decent. That carried us $10 up. Now, of course, we've come back down again, so which is why risk management is key. When should you have exited? There. You should have exited there. And again, that was very predictable. You didn't need to hold on to it. And right now, well, we're recovering. We're in a sort of recovery phase, you know. The not drinking and taking cocaine for a couple of weeks was positive for Zillow's management. I'm not saying that drug takers, by the way. I'm just feeling silly today. But the resistance is $5 above where we are right now still. So I'd quite like to take out that $85 level. And I'm also seeing very little volume down here as we're recovering, and that's not beautiful. We want to see big volume bars as we go up. So wait for that. Be patient. That's what the market's all about. Investing and trading is 90% patience and 10% rules. That's really all it's about. So it looks like very, very good. It looks promising. I think we are going to get another breakout like we did over here, but it's a little early. That's the way I would look at it. You could be one of those people that just loves pain and you just discount average, and in the long run you'll be just fine. But just remind yourself of that, and then the crying that happened here, right? And the secrets people kept from their spouses. So let's wrap this up. It's 2025. AI agents are real. Most people don't even know what they are. And these 5 companies we just ran through here are participating in that AI agent madness. Microsoft, ServiceNow, Palo Alto Network, and Zillow. And all I would then do is, now you're aware of a trend that could make us a lot of money. NVIDIA also. And all we now need to know is, like, how do we get into this? When do we get into this? When do we pull the trigger? When do we exit? Well, I'll teach you the system that I use and I've been using for years, and it's given me freedom. And it's free because my mission is to spread this joy to 1 million people, get 1 million people to freedom, and then please teach your children, teach your friends, and we're going to make this massive impact. And Winston and I will have more friends to go hiking with on a Tuesday morning. So I love you for watching. I love you for tuning in. I hope to see you on the next one. You got some value out of this one. Share it with a friend or a golden retriever. All the best. While everyone's talking about the $500 billion AI Stargate project, they're talking about Microsoft and NVIDIA and Oracle, people are missing the one company that's positioning itself at the very heart of this massive infrastructure investment. And I want to dive deep into that position today because it is, of course, Palantir, and it could be the biggest government-backed AI project in history with Palantir right at its core.